The SFM Market Update with MoneyWeb is brought to you by Discovery Invest. Success is inevitable because Discovery now brings you investments. Well, unprecedented moves by world leaders over the weekend have resulted in a strong move by markets around the world today, but there are still a lot of eggshells on the floor and everyone is picking their steps pretty carefully. So calm for now, I suppose, is the watchword. We're going to be chatting to Investec CEO Stephen Koseff live from Washington a little later to get the latest on what's happening on the ground there. We also chat to PSG Chairman Jannie Mouton about results out today, and also get market commentary from Sasfin's David Shapiro and, of course, Macquarie First South's MTS Ahmed. But first up, here's the news. And here's Chris Buchanan with the news headlines.
The market downturn exposes PSG's earnings. Trevor Manuel says South Africans must cut their desire for credit. Eskom's demand for steel to treble. And Brait downgrades earnings as M&A activity dries up. The JSE up over 4% to 21,451. Gold at $832 a fine ounce. A barrel of Brent at $75. The rand at 9.17 to the dollar, 15.92 to the pound, and 12.43 to the euro.
Thanks, Chris. Well, David Shapiro of Sasfin joins us now. David, I suppose one of the best ways to describe what's happening now is calm for now.
Calm for now, Jeff Money Market. It is calm, and I think it's more relief than anything else. I think after last week, the fact that we had a coordinated effort from the world's Western governments, I think has brought some kind of comfort into the markets. But, Jeff, what we got to look for now, and understand that it's going to take time for this to filter through the systems. I think what we must now watch for is where money market rates are. And in other words, the spread between what you can borrow from the government and what you're lending out to commerce or commercially. And when those spreads start to come down, or the interbank rate starts to come down, it's still pretty tight. Then I think the markets are going to rally in earnest, and people will see that money's flowing, that it's going to be easy, or it's going to be easier to gain credit. So, but for the meantime, I can live with the kind of gain that we saw today.
I think few people will be complaining about it, I suppose. But if we look already, companies like Brait saying we're going to have to cut back on our earnings estimates because M&A activity drying up, not surprising at all given the current or lack of liquidity.
I think we're going to go in for a quite a lengthy period, probably 6 months of inactivity as confidence builds up. Everybody's watching, very, very concerned. And I think that I was just listening to the news broadcast, to say that how our economies are protected. Yes, to an extent, our banks are in a much better position, but don't underestimate the extent of indebtedness here by individuals and how they're feeling it. And I think that's also going to show on the economy. We all read the headlines, we know what's happening, and I think people are still going to be nervous to go out there and undertake big projects, whether they're property projects or whatever, or go and buy new machinery or go and expand their businesses. So I think from that point of view, we will be gripped by fears in the market, and that's going to take time. But as soon as money starts to flow again into the corporates and that, I think the turnaround could be quite sharp, because I think there's some very, very juicy options out there.
David, what did you make of PSG's results? The headline earnings down 84%, what they term recurring headline earnings, which seems to be a new number for me, up 33%.
Yeah, that's the fee income, and they've done well. In other words, if they take their stockbroking business, financial advice business, their finance and other banking businesses, they've done well, and that's what they're referring to. They continue to earn fee income. But I think PSG is one of the big areas of the market is their private equity business, and that was marked down. That came sharply down, and that's why I think there was almost like a 400 million turnaround in the 6 months because of this market fall. And they have to show that through the income statement, and that's why you had this very, very sharp fall. But it's not cash related. If they had to sell it, of course it is. So I think they're trying to take the focus. Nevertheless, the market, I see, moves the shares up, but generally I think all banking shares were up. It's fundamentally a good business, but they're not going to escape the sharp downfall in the in stock prices.
Why would ABSA be up as much as it was?
I suppose relief that Barclays been saved. I think everything's up. There's been incredible gains. I'm looking now at Dow Jones up about 6%, which I find extraordinary, and saw the French market up 11%. So, a lot of relief. But Jeff, we got to build on this. Not one day. It's got to be 2, 3 days, 4 days like this, to try and bring some of the bargain hunters in, and together with money market rates coming down. But there have been some incredible gains across the board. Anglo's up about 15% in London, which, that's a huge, huge movement. I won't tell you that they dropped 15% last week.
Well, that's what people tend to forget. David Shapiro is with Sasfin.